So I want to talk through Confluence strategy on gold, X USD. I haven't used futures in this one. I've just used a normal gold spot contract here for on TradingView. But I want to talk about how to understand how the Confluence start to combine to give you confidence in the directional flow of a specific instrument. And this is gold today. So first of all, I want to look on the left. Now, the indicators I'm using here are part of the Ultimate Trading Bundle. So basically, just about everything we do is included in the Ultimate Trading Bundle. But what it is for serious traders, and the link's down below. But I want to show you how we combine these two to get that confidence and use those confluences to give us some really great trading opportunities. So, first of all, on the left, we're coming in on the Sunday night here. Last night, and we have a crab pattern here in the harmonics, and that completes in the automated completion zone. So you see this purple patch here. What we say is if this crab pattern does complete in there, then it is a complete pattern. Look for a short. But there was no short signals from the rest of our indicators. Plus also the bias depth heat map down below is basically saying it's still pretty bullish. So we don't trade the short, that's fine. But straight away we start to print a Gartley pattern. Now it's coloured in green, so we're looking for a resulting bullish trade here. One thing to note is where we complete the crab and where the A pivot is for the Gartley is a very strong pivot point here. So we must include that and send it out to the right for future risk to reward calculations. So we've got the harmonics finished. It completed in the completion zone here for the Gartley, so that's good, but we're not going to take a long trade right now. We can see that we're totally mixed on the bias depth heat. We've got red, yellow and green in there. There's total indecision right now. What we do need is one of our momentum signal generators, the xBrat Algo, to produce a signal. When it does, in this case here, on this candle here, we check the bias depth heat map. All 6 time frames are green. So we've got signal, we've got confirmation. This is our entry. We use a stop market order. So we've got lots of fresh air all the way up to this this A pivot up here. So it's good to go. We've got signal, confirmation, fresh air. We get in. I've put some other entries in here. You can't see why in a minute. But this is where Confluence comes in with a different type of strategy. So now I'm going to enable what we call the VWAP Predator. So this works on volume a lot and also the VWAP. So I'm just going to put that on there. So what happens now is after this 6-star buy, we get a buy signal on the VWAP Predator here. Okay. Now, all 6 time frames are green underneath. We've still got some decent fresh air up to that pivot, so I'm going to go and take it. Stop market order, so it doesn't actually get taken until this point here. Quite a long time has passed, but it's gone in. That's our second entry. We then get another buy signal on the VWAP Predator at this point, pretty close to where the entry was there. Again, we've got the confirmation. We've got a decent bit of fresh air up to that pivot. We're going to add a third, we're going to add to that position for the third time. Then we get another one. This is the decision point we've got to make now. Is that too close to that resistance level? What's your risk to reward? Is your risk to reward 1-to-1? In which case that's fine. You can go in. If it's 1-to-1.6, you don't take that fourth element. Okay. So I'm just going to take that off a second. And just move this out of the way, just bear with me. Okay, so I've just cleaned the chart up a little bit just to show you now how we manage this trade. So we're going to be using the manager. So there has a manager ribbon here. Okay, as long as it remains green, you can stay in, and that's the sort of more conservative type of approach. One thing we do have to recognize though with the manager, so we're in. We say we've been conservative and we've only had that initial start. We've added to the position here, added to the position there. We didn't take that one. So let's take that one away. At this point here, the price action moves up and rejects those highs on higher than average volume because of the dot up above. And this is called the xBrat manager. So that big rejection on higher than average volume is a warning sign that it could come down. So at this point, me personally, I would put a break even. So if we've gone in these threes, our average holding position is around about here. So I'm going to put a trailing stop position there. I'm going to color that in red so you can see it. So again, if you look at these three starting positions, our average holding position is around where my cursor is at this point here. So I'm going to put a stop above there to make sure if it does come back against me, I'm out risk-free, made a little bit of money, but not too much. I want to give it some room. I want to make sure that this is not a one candle wonder, in which case it did turn out to be that way, and we came back down, but we came back down with these blue dots underneath. Now the manager tells me this is lower than average volume, okay? So this is an orderly pullback, some profit taking, no real big sellers coming in here. So at this point then we start to move back up. So once we sort of breach this zone here at this point here, I'd probably just move that trading stop underneath that pivot. Very sensible locking in profit. We get a 6-star buy at this point here. We've got confirmation, but we haven't got any fresh air because we've got this big rejection point here. We're not going to go long because the same behavior could happen again. So we don't go long. What happens is we then actually just cluster around this point where we had there. So nobody really wants to buy because there could be a lot of sell orders in there. So then we get what we see is here is a big red candle, but it's rejected the highs here on higher than average volume. It does it again. It's 2 times. This is the aggressive exit at this point. If you decide, okay, I've got to stop, I'm locking in profit, I want to see what this does. You can see it comes back down, comes back up again, but eventually starts to come down with a big red candle this time. And the manager ribbon turns red at this point. So you're going to get out anyway. But again, this is why the manager is very important to understand these dots above is higher than average volume. And this big rejection at this same point here is not, 1, 2, 3 times. You've got to take note and get out if you're not already. Yes, you've got profit locked in here. So Confluence is very important. Understanding the overall behavior of the instrument. And again, this is where harmonics come in. I don't trade harmonics. What I do is allow them to tell me where those levels are and how, if we're in a measurable pattern. Harmonic patterns are quite complex. The algorithm does it for himself. That's good. It's completed. We know now it should move up, but we need that confirmation. We need a signal from one of the others in the ultimate trading bundle. Now we get that here. We get a 6-star buy. We've got the confirmation from the bias depth heat map. We're going to go. And then, as I said before, once we add the Predator to the mix, we can then scale into a position and make that position bigger to make greater profits in reality. But then we must use that manager and understand that behavior. We've got full training for the manager, and put the link down below for that training below this video, because it's very important then that we're in a good position. We've got the momentum, we've got that initial 6-star buy, then we've added to it the VWAP Predator. We're really going for it here. It's a really good move. We need to manage this sensibly and understand the behavior, and that's where the manager comes in to make that a really good trade. And in reality, what we're looking for here, if I measure from the first entry, from the average holding price, I should say, all the way up to where we go on the red here, 594 pips. That's pretty good. It's not a bad move for a Monday morning, actually. And again, understanding the time of day this momentum started is very important. This 0-200 hours here is EST time, because all my charts on EST. That is when the gold pit opens for Europe. Okay, 3 o'clock is when London opens. We know this is normal behavior. It doesn't happen every day, but it's the time of the day. It's the confluence of the harmonic pattern completing, and then the resulting bullish trade starting. We get the gold pit open, we get a 6-star buy from the xBrat algo, then we get buy signals from the VWAP Predator, momentum's building, volume's building. We need to get in on this trade, then we need to manage it. And that's all included in the ultimate trading bundle. So for serious traders, this video and the software that we provide makes really strong trading conditions for you, understanding that building those confluences and understanding that that directional flow is increasing allows you to get in and scale into those large moves.